CrossingBridge Advisors presents the CrossingBridge Pre-Merger SPAC ETF. So you've been scratching your head trying to figure out what to do with your fixed income allocation in this ultra-low and now rising interest rate environment. And you know that to get more yield, you have to take on more risk, right? Then a friend mentioned SPACs, but everything you read and hear about them implies get-rich-quick lottery tickets. You know, more for the bungee jumping, skydiving, do-your-own-stunts type of investor. In other words, not you. But guess what? That's only half the story. There's a whole nother side of SPACs that gets much less press. In fact, by investing exclusively in pre-merger SPACs, trading at or below their trust value, the fund can aim to capture the fixed income nature of SPACs rather than their high-flying risk-reward attributes. At CrossingBridge, our team is deeply experienced in SPACs, having invested in our first SPAC over 15 years ago and well before the current craze. We launched the CrossingBridge Pre-Merger SPAC ETF to give investors the opportunity to invest and attempt to benefit from the widely misunderstood asset class of SPACs. Given that SPAC shareholders have a full redemption right to their share of the trust account typically invested in U.S. Treasuries, the downside risks of pre-merger SPACs are significantly limited, while also presenting the shareholders with potential equity upside. Who said you couldn't have your cake and eat it too? Here's how we do it. We only invest in pre-merger SPACs trading at or at a discount to their trust value, with no intention of moving forward with the deal. If a SPAC announces a deal, rather than speculate on the future of the newly combined company and take on equity risk, we intend to exercise our right to redeem our shares for cash. Or, if the market reacts favorably to an announced deal, we can just sell our shares in the open market. Think of SPC as an ETF that aims to capture the fixed income nature of SPACs, has limited sensitivity to both interest rates and credit risk, is backed by a trust account, and gives you an opportunity to participate in potential equity upside. No jumping off airplanes required. Want to learn more? Visit CrossingBridgeFunds.com.